Welcome to this week's live ASX strategy session. Great to have you with me as always. And I think we've got plenty of good stuff to go through today. I'm going to look at that ASX 200 first, move on to the commodities, gold, copper, oil, and uranium. Got a couple of stocks I want to talk about with you. So I think we're going to be busy. Lots of interesting market action to go through. As always, everything today is general commentary only, no personal advice given. Look, having been through all that, I think it's time we get straight into those charts. So here we go. We've got the ASX 200 up on the screen. And this week it's really been a week of consolidation with the price coming back. So last week we had a new all-time high on Thursday last week when I did the live session last week. It was a new all-time high, and this week we've been getting that pullback. And so far, the price action has been, I describe as encouraging. And that's because, well, the US markets on Thursday were down something like 1.2 to 1.5%. And so far on Friday, the ASX 200 is down around 0.7%. So down about half what we saw in the US. I'll talk about the US markets separately in the other video that I do. But I think just briefly, I think that the prospect of a pullback in the US is increasing, and that's naturally going to have an impact on the local market if indeed that's what happens. But on balance, when I look at this and take everything into consideration, I think overall the price action remains positive. The ASX 200, it continues to move upwards along these rising moving averages. So I've got the 50-day and the 100-day moving averages. And just looking at those moving averages, there's no signs of them at this stage starting to roll over or flatten out. They're continuing to move nicely upwards. And price, which is most important for me, the price is above those moving averages. And price also isn't stretched. It's not stretched above the moving average. It hasn't been like we saw towards the end of December, where price did get quite stretched and then came back and had that bigger pullback to the moving averages. It doesn't look like we're at those extremities of a move. So overall, I think the price action does look fine. It looks encouraging. There's always going to be something to worry about in the markets, be it the ASX 200, the S&P. There's always something to worry about, whether it be news related or price action or markets have run for a while or whatever it may be. There's always something going on. But at this stage, I think the underlying upward trend remains in place. There's nothing there to tell us otherwise. And it is interesting when you think about it. There are two ways that we can approach markets. You can either be a predictor or you can be a follower. So a predictor is someone who's going to try and foresee what will happen. They'll say, I think this is going to happen in the future. I think the market is going to do this. So a predictor. And whereas you can get a follower, and that's someone who's going to react to what is happening. So I've tried both. I've tried both throughout my career, and I can tell you, I've made a lot more money being a follower than being a predictor. It's prediction's a hard game, and most of the time you try to predict what's going to happen, it doesn't work out. So for me, following the price action has been the better play. So if you want someone who's going to predict when the final high is going to be made, well, I'm not your person, because I'm not going to do that. But what I can do, I can help you maximize profits along the way. So when you've got stocks which are in the money, I can help you maximize the profit from those stocks. And I can also help you manage risk so that when a high does develop, whenever it may be, whenever a high does develop, when the market does start coming back, then you already have those capital protection strategies in place. So right now, I'm continuing to let profits run. There's nothing here which suggests that I should be selling all my stocks and going to cash. I'm continuing to let profits run. I'm not going to let a few down days scare me out of positions which are profitable. And I'll show you. I'll just quickly show you inside my portfolio. So this is my self-wealth portfolio, which sometimes we jump in and have a look. But you can get the same information from the front page of the Motion Trader website. You pretty much have all that stuff there anyway. But coming inside the portfolio, I'm just going to order the stocks from top to bottom. So the biggest gain at the top. So you can see I'm holding these stocks. 278%, 222, 166, and so on. There's like 600 or 700% in there. Come down the list in through the big double digit stocks. If I was selling every time we had a down week or there was some uncertainty, I just wouldn't have these gains in the first place because I'd always be getting frightened out. So this is a point. We can't get frightened out of the market every time it looks like maybe there's going to be a pullback. And because there will be pullbacks, and we can have strategies that can help us see off pullbacks, come down through the portfolio a little bit more. So I think there's about 55 or so stocks in there, thereabouts. So it's not all 100% winners or 200% winners or 80% winners or whatever it may be. Get down into the losing trades. So there's so starting from Joyce Corporation, it's down 0.5%. So you probably say that's breaking even. Get down to the very bottom. And so Hum Group's down 27%, Resimac down 15%, Electro Optics down 14%. So these, this bottom one in particular, that's right on the edge of being kicked out of the portfolio. Resimac is sort of getting to the end of its runway as well. But this is what happens in a portfolio, and this is how you manage that risk. As stocks get to a point where they've been given enough time, they get the boot, and the money either goes into cash or goes into a new opportunity, depending on what is available at the time. So it's very much how I'm managing the portfolio. It's keeping the stocks which are going well, trying to see off those pullbacks along the way. The only way you get these big triple digit gains, you've got to see off pullback. So I talk about all that. I'll talk about that more another time, and I'll put out that video during the week about trailing stops. That's all about that. And one of the segments of the markets which I've been discussing in the paid section of the strategy session. So if you're a paid strategy session member, you'll know about this. If you're not, this is some of the stuff that we talk about. It's the emerging companies index. So a lot of the stocks you just saw in my portfolio a moment ago come from this emerging companies index. And strategy session members, we first started talking about this in February when the index moved from below the moving averages to above. We started talking about how we had a nice upward move, tight sideways compression. And I was saying, look, this is looking interesting. It's looking like we could see some upside. And that's what's turned out to be the case. So as I say, many of my stocks are from this segment. And if you're a strategy session member, look, hopefully you've got a number of stocks in from this index in your portfolios already. And as I said before, it's not a case of, for me, it's very much a case of following the price action. That's what it's been, like following the price action that we've had in this emerging companies index, as well as the ASX 200, not trying to predict it. And as you see from the results in my portfolio, it's that's the approach which has been working, not predicting, but following the price action, letting profits run, staying with trends, and of course, really importantly, managing risk. So coming back to the ASX 200, at this stage, I think that overall trend is upwards. I want to maintain exposure to the market, as you've seen. The last 4 months has just been a terrific trend, really good gains. It's easy to forget that it's not all smooth sailing when you look back over what we've just experienced. So I'm using those wide trailing stops to let these profits run, because I do know that markets can get choppy, they can get volatile. Not predicting that's going to happen, but I'm just prepared should that happen. I've got those trailing stops in place. And that said, I'm also not rushing to buy a whole lot of stocks at the moment, particularly those that have run hard. If I get the right setup, I'm happy to buy, but I don't want to chase stocks which have run hard. We always need to keep an eye on risk. And just, when you look at the US video later on, it's like, for me, it's just not a case of chasing stuff which has run hard at the moment, but definitely letting those winning positions run. Now, if you're getting some value, please hit that like button, leave a short comment, just thanks for the video, something like that. Just tells YouTube people are watching and you're engaging, and YouTube shows other people, which helps me a lot. So please do that. Now, I'm going to move on to the Small Ords, the commodities, a couple of stocks I want to show you. But that wraps up the free section. If you're not a strategy session member, it costs you next to nothing. Come over, become a strategy session member. We lots of good stuff like those emerging companies and stuff that I was just looking at a moment ago. Yeah, it's all there for you. So come on in and have a look. Now let's jump over to let's go to the Small Ordinary.